Morning.
Morning.
Hey, John, can you hear us?
I can hear you. Thank you.
Perfect. Great. So thanks for coming. Thanks for joining us. I would like to hand over in a very idealistic way the mic to Peter to explain a bit about what the Commission has been doing or tries to avoid to do on NFTs. And also maybe as the Parliament soon will draft a resolution, which unfortunately Eva cannot speak about today, but you can maybe elaborate a bit about how the process works, about NFTs and how this flew into MiCA and what's the actual regulatory consequence of the finalization of this super important regulatory framework and what the industry should expect to happen once also the level 2 texts are out. And so very easy stuff, right? I know you love to talk about this, so please, floor is yours.
That's a very big question. So I'll try to be more or less clear. Because you asked, what was the Commission trying to do? And of course, there's also the issue, what did the Parliament and the Council end up doing? And what does it mean? So the Commission made no distinction between what we call general crypto assets or stablecoins or NFTs. We just said there are crypto assets, meaning values which use distributed ledger technology and cryptography. And if you issue these, you are covered by Titles 2 if it's a general crypto asset, if it's a stablecoin by Title 3 or Title 4 of MiCA, that's for the issuance. And if you provide services to these assets, wallet services, brokerage services, exchange services, then you're also covered by MiCA as a crypto asset service provider, irrespective of whether that was a crypto asset of which there are 21 million, or a crypto assets of which there are billions, or crypto assets which are unique. That was the Commission's proposal. The Council said, well, we want to limit this to only crypto assets which are fungible, and therefore they should not apply to non-fungible crypto assets. So they wrote in that MiCA does not apply to non-fungible tokens. So therefore you can say, therefore, non-fungible tokens are out. And the Parliament accepted this change, so the Commission went along with this as well. However, MiCA does not define what is a non-fungible token, but it has a lot of, how will I put this diplomatically? It has a lot of pros, especially in the recitals, going on about what is or is not a non-fungible token. And it has a very peculiar sentence in there, which says that if a non-fungible token is part of a large series or a collection, then that's an indicator that it's fungible, which is actually incorrect, because the fact that you're part of a collection or a series doesn't make you fungible, but that's clearly the intention or the wish of the legislator. So if they include this into the recitals, it must have some consequence, it must have some meaning. Now, what that will end up meaning, we'll have to see in the implementation as to how member states will apply this and how the industry will respond to this. Of course, those service providers that provide services to NFTs may say, well, look, NFTs are not covered by MiCA, therefore I do not need the Zika license. Fine. And they may get away with that. But if they do that, they will not get a passport, which is the benefit of MiCA. And there's also another piece of legislation currently being negotiated, the anti-money laundering regulation, and they may still be caught by that legislation. There's amendments on that in Parliament. So they may still be subject to AML obligations of know your customer, registration, maybe even licensing, customer due diligence. So that's what the future kind of looks like, but it really is ultimately a choice of the service providers as to whether or not they want to fall under this framework or not, and they can build an argument as to why they're covered, and they can also build an argument as to why they're not covered. Now, there's also the Parliament is working on a resolution on NFTs, and this resolution, of course, still has to be adopted, but typically is the result of what they call an own initiative report. So Parliament on its own initiative develops a text and sort of makes a number of statements saying this is a problem, that's an opportunity, we want to do this. And then it invites or requests the Commission to come forward with an initiative, a proposal to act on this. Now, strictly for everyone here in the room who studied EU law and EU affairs and paid attention while he or she was studying this, would know that the right of initiative is reserved to the European Commission under the treaty. So the Commission cannot be compelled by either Parliament or Council to present a proposal. It's the exclusive right of the Commission. That's what the principle says. There's also a practice, is that, of course, if there is a strong political indication or wish for an initiative, that may move the Commission into presenting it. Or there's also an interinstitutional agreement between the Commission and the Parliament, which stipulates that if the Parliament requests the Commission to take action, the Commission shall give due consideration to such request. And if it doesn't act on it, it shall justify, it shall explain why it doesn't act. So that is really, we'll have to see what the resolution says. We may act on it. And if we don't act on it, we'll have a lot of explaining to do. And I think we'll end up having an unhappy Parliament, and we don't like unhappy Parliament.
Just a quick follow-up. Do you have any expectations of what's written in there? Or is this like you're basically just as going to be surprised as everybody else?
Given that I know some people who are very closely involved in the development of this resolution, I have great expectations as to what it will say, but I don't know what it will say. But my expectations are very, very high. So I expect words of wisdom.
As you heard, Commission expects words of wisdom. So as an industry, what should we tell the Commission that they feel more wise than before? I mean, maybe we start with you, Jeffrey. When you hear what's going on MiCA and on own initiatives report, what do you think about this? Is this like what we need? Is there something missing? Is this the right direction? Is this the wrong direction? What's your first response to basically what we have and will have with MiCA and other regulations in the future?
Well, I'm certainly hopeful that they are words of wisdom that come into play in order to help us with our business. But maybe if I could just take a moment to introduce our business.
Go for it.
So atomichub.io was founded in 2020 in Germany. And we started up there with a focus on blockchain gaming because we felt there was a tremendous opportunity around that. We've grown substantially since then. We have more than 40 employees across Europe today, including Portugal, France, Germany, Denmark, where I live, Poland, and Lithuania. We have 2.3 million customers in 181 different jurisdictions, and we sell 60,000 NFTs a day. The vast majority of those are focused on blockchain games. So if anybody here has ever played these massive multiplayer online role-playing games, if you're a level 23 warrior and you want to buy a level 47 +6 broadsword, you'll do that on our site. And while we are selling 60,000 NFTs a day, but 65% of them are for 50 cents US dollars and less. So we have a very high volume of microtransactions with a broad demographic range of users on the platform who are coming to us because we provide a marketplace for buying and selling these assets. And ultimately, it's a kind of technology that we built upon. We're anticipating the future to say that this will be the use case that drives the first billion users onto the blockchain. And when I'm here today and hearing about the best of intentions to create good regulation around NFT as a type of financial asset with banking regulations in place. I'm a little concerned about what that might mean for a consumer who ultimately wants to spend 50 cents on a sword to use in a game. And if the process, the bar of compliance is so high that I can't sell that profitably, it undermines my business and creates an unfair playing ground for a European business versus companies from other jurisdictions who may not have the same bar.
Thanks, Jeffrey. John, maybe you can explain a bit about what Shopify does in the NFT space, and how do you see the token economy play out in your ecosystem or environment that you operate in?
Of course, thank you very much. Unfortunately, I'm not in the room with you. I was actually speaking on Money 2020, and there's no direct flight to Brussels, unfortunately. But I'm here with you, at least online. And one of the things that Shopify is really focused on trying to do is to provide the ability for merchants to be able to sell NFTs or to distribute NFTs as a means of communicating and creating communities. We have about 600,000 merchants across Europe, and we've been getting a lot of interest in either distributing NFTs to existing customers on Shopify, or to provide the ability for people to leverage NFT assets that they may already own to interact with those set of merchants. Now, the interesting aspect here is we are also looking at NFTs asset more as a tool to enhance community building rather than an underlying asset itself. So think in terms of something like a receipt that a customer may receive to prove that they've actually done a purchase. Those receipts being NFTs, those NFTs are free. And when they're free, there really is a very big issue in considering an NFT as a proof of purchase to become a financial instrument, rather than looking at it strictly as what it is, which is an underlying determination of what you've done, just a record of what you've done. And what our merchants are doing with this is they're taking these records and providing exclusive access. So as you can imagine, some merchants really like to have repeat customers. In order to get repeat customers, when they distribute these NFTs as receipts, they will allow a buyer to connect a wallet to their storefront and allow exclusive access to certain products only if you've been a previous purchaser. When you consider that to be what we call token-gated commerce, the utilities of the asset are not necessarily meant to be traded freely on an open market, but rather to strictly be used to determine what kind of interaction have you had with this merchant. And that's a really important distinction that we as Shopify are trying to make sure that everybody understands, and we can have this open conversation about how these underlying NFTs can be used beyond just strictly commercial aspects, but rather to do community building. Because we feel that our merchants, Shopify merchants, are coming to us asking us for better ways to connect with their buyers and to create loyal fan base for their brands. And we very much feel that this concept of token-gated commerce, leveraging NFTs, is really the way forward in e-commerce.
Thanks, John. Sorry, can you hear me?
Yeah.
Okay.
That's right.
What I wanted to ask now, Thomas, is now that you heard basically the European approach, you know what the industry needs, and I know that Liechtenstein were one of the first movers on with your Token Act. How did you approach this in Liechtenstein, and when you see what's happening in the market and what happens at the EU level, is this something where you see like Liechtenstein better positioned, or you think like confirming basically what you're doing or what you did already as basically the first movers in the place? And where do you think we still need to adjust or improve what we do? And also, what could the industry do better to make the regulators better understand where this is heading to? Or is it too early stage still and we just have to be a bit patient? What would be the next reasonable step in your view?
I mean, for all of you that are not familiar with the Liechtenstein Blockchain Act, I just explain what our approach was. So when we started to draft the Blockchain Act, we have seen not only the financial markets activities using blockchain, but also the use of blockchain in the broad economy, like you have presented, but many more use cases that are not part of the financial markets as we know today. So we have decided to, and we have seen that the challenge of classification. So at that time, we have been discussing about security tokens, utility tokens, and payment tokens. And it's from a legal point of view, it's not easy to define something so that you have no discussions afterwards. So we decided to stop that and just introduce a general token, which can be used for all kind of tokenization. So I think we still have the only framework in the world where it's possible to directly tokenize every kind of right in a legal system, which is the fundament for a token economy, I believe. So, but what I see in the reality is that just by the invention of tokens and also the term crypto assets, we risk that the financial markets regulations just broaden to the real world economy. And your concerns, I agree that so we risk that things that have been made differently in a different sector of the economy are now risk to be treated under financial market laws. So to illustrate another problem I see from Liechtenstein. So Liechtenstein was famous, or still is famous, for stamps, and now our post office has decided to issue blockchain stamps. So the first two were not tokenized, the first two versions of the blockchain stamps, but the next stamp will be tokenized. So and a stamp is a fungible asset, or a fungible item, I would say. It's paper-based, so it's from some legal definition perspective. It can be seen as a security, or it can be seen as a fungible token or a crypto asset if it's tokenized. And so the post office came to me and was asking, so do we need to register according to financial market laws if we want to tokenize the stamp? And actually, I couldn't give an answer to them. And the answer from their perspective was to issue an NFT. So then it's not fungible, and then it's clear in future, according to MiCA, it shouldn't be treated as a crypto asset. But we will see in the practice, and this is the risk, the huge risk I see in the future. I mean, you've made a lot of effort to discuss the legal framework for crypto assets in the future, but this border between the real world economy and the financial market applications and the gaming and what you're discussing is still blurry, and we need clarity on that by supervisor, by regulator in practice, what happens there. And this is still the major risk I see that the token economy can emerge as we see. And just as a advice, I mean, in Liechtenstein we have defined the broad token definition, so it's possible to tokenize, to reuse the civil law fundament also for gaming tokens. But the question, what happens with the financial market regulation, is a European matter, and so we need to discuss all kind of use cases and the best on a European-wide perspective, so that we discuss what is the scope of financial market regulation of MiCA and so on. So this is the challenge I see there.
But if you're writing the regulation now and somebody who wants to issue a stamp in your government, you can't give them the guidance on whether or not they have to register. Is it possible that the regulation is premature? Shouldn't we let innovation be a seed in the ground, allow companies like ours to really innovate and invest in research and development, and give us a sandbox to play in before potentially overly prescriptive regulation comes into play?
Yeah, that's a very good question. So, I mean, what we try to do with the Blockchain Act is not to regulate financial market activities. We did not regulate a crypto exchange, but we regulated. So if somebody makes custody for a third party as a service of tokens, then he's regulated. So in your terms, if your tokens are of high value, it might make sense. If they're low value, it doesn't really make sense. It's true, but we try to find a way that it's not. So we protect users that I want to use tokens, but not to go too broad in this financial market discussion. So that's it's overwhelming. But you're right. It's basically it's a huge question how we create to just get over this gap between the regulation and user protection and innovation. And I personally believe that we must find a way in the future that innovation is possible even in a highly regulated sector. So the scope of the law is always broadened. So I mean, it will always be more difficult to be innovative, and kind of we have introduced in Liechtenstein the concept of the regulatory lab for that. But so that if it's not clear if you're under financial market law or not, there is an opportunity to let you go, but with a certain a soft form of supervision, so that it's possible to follow the principles of the financial market. But in practice, it's not so easy to live that. There are other versions like the sandbox concept, but we are not ready for that. So it needs some form of discussion to allow innovation. And in parallel to cover those business models we see that are adults like crypto exchanges with a good framework. Right.
Peter, I know the Commission has some experience with sandbox as you just launched the pilot regime. Do you think it's time for an NFT sandbox, or is this too early, or is this a bad idea maybe?
It's too late, who knows? Of course, just to make sure that my colleagues are not angry with me by recognizing that the DLT pilot is a sandbox. I say it's not a sandbox, but I know what you mean. It's an experimental regime to allow this activity to be conducted. Because before we did, and the DLT pilot really is an exception regime for market infrastructures so that they can use distributed ledger technology in, for example, central security depositories or in trading venues, and that needed this clarification. A regulatory sandbox really is a supervisory tool. It's not something that regulators do, it's sort of supervised to it. So to apply a regulatory sandbox, you must be in a regulated field. Now, if the area of NFTs is not regulated, then there is no point in doing a regulatory sandbox either, because the entire world, the entire ecosystem is a sandbox. So you can do whatever you like, provided it's not criminal. So if you say, well, do we need a regulatory sandbox or a supervisory sandbox for NFTs? That presupposes that there's regulation covering NFTs, and that this regulation or the application of this regulation raises complex questions or may inhibit the innovation. If that is so, so if people can demonstrate, well, this or that rules really prevent us innovators from developing this activity which has great societal value, such as gaming, swords, category 43 level thing. I'm joking, but sort of people attach great value to that and say, if there were to be rules that prevented you from doing this activity, then you say, well, should we change those rules? Or should we say, well, we don't really know how this is going to pan out. Maybe we'll apply or we create a regulatory sandbox in which this activity can experiment without having what I would call a literal application of the rules. Because a lot of people think that a regulatory sandbox is an area in which no rules apply. But that's actually not true. A regulatory sandbox is a bit like a sandbox in kindergarten. And so certain things are allowed. The kids are allowed to get dirty, but there are also certain rules that apply. There's no spitting, no throwing, no kicking. And where does the teacher stand? The teacher stands next to the sandbox and is observing the activity. So the idea that a regulatory sandbox is a free-for-all and people can just do whatever they like is not correct. The regulatory sandboxes which you see actually get much more attention from regulators and supervisors than the general economy. And we see this, for example, in the UK with the very developed regulatory sandboxes in the financial field. But we also see this in technology sandboxes in the US, for example, where regulators and supervisors pay an awful lot of attention to what goes on in this sandbox, but they do not slap the rules literally over the head of the people who are playing in the sandbox.
Thanks, Peter.
Maybe I can step in that. So I fully agree with you. So a sandbox approach is necessary if we agree that one activity is part of a law, of a regulation, or falls under the scope of the regulation. So what we have, I don't want to go back to the discussions of yesterday about DeFi, but what we see in the DeFi developments could be some justification for using of a sandbox, because you have mentioned yesterday you don't believe that there is a fully decentralized form of exchange, and so they are covered with MiCA. And what we will see in the future, if MiCA is the proper form of regulation for such forms of not 100% tax. And so if we come to the point that MiCA is not the right form, we need some form of a sandbox inside of MiCA. Otherwise, the DeFi development will not be possible in Europe. The other challenge is this instrument classification. So now I'll come back to the point of the NFT. So if true 100% clear NFT is not under MiCA, and some blurry forms of MiCA, maybe of NFTs are under MiCA, there we need this form of a new way how to enable innovation. But because in practice, I mean, if you're in the role of a regulator, of a supervisor, if a company comes to you and says, "Okay, I'm a gaming company. I have the NFTs, and they're a bit fungible, but not really fungible," then what do you do? I mean, you have the decision between regulated and not regulated activity, and if they decide to allow a not regulated activity, then it can be a risk for themselves. So usually, that's a standard decision of a regulator. It's always a kind of a bias between to the regards of a regulated sector, and for that we need some form of how we handle that.
The opportunity for the regulator, though, is to put in place a principles-based approach to say we care about consumer safeguards, we care about innovation, we care about investment, but it's so early with the advent of this new technology, we don't know the use cases yet. I mean, John was talking about Spotify having 600 merchants across Europe. Pardon me? Shopify, excuse me. 600 merchants across Europe, and they're looking at token-gated commerce. You know, we currently, as well as selling gaming, we have collectibles, which include, you know, Topps baseball cards, which are available on our platform, and garbage pail kids. And if you have a certain garbage pail kid in your wallet, they may unlock special content. You know, we see movie publishers, we see game publishers, book publishers, lots of people looking to have content access unlocked by having ownership rights around an NFT inside your wallet. You know, the use cases haven't even been envisioned yet. So when you're looking at a regulatory framework for NFT gated anything, you know, try to keep in mind the principles around what it is you're trying to achieve, as opposed to putting in place a set of overly prescriptive rules, which may prohibit innovation and investment and just encourage it to occur outside the EU.
Yeah, when we look at sorry, go ahead.
If I may, yeah. No, so 600,000, where the scale was a little off, but we have over 600,000 merchants in Europe right now. But I think to your point, it's really important because one of the realities that we as a platform have is when the regulations are not clear, or when there are issues in trying to understand exactly what's happening, our role at Shopify is to help our merchants actually operate in the environment that it exists. And oftentimes, we can't reinterpret regulation on behalf of our merchants. However, our merchants do ask us as experts, like, what can you do? What exists? And our response is often, well, this is our understanding, and this is tool sets available for you. And we believe that our tool sets meet the regulations as they are described and as they're written. Part of the issue is, we talked about this, is where, you know, in MiCA, the definition of NFTs is a little murky. One of the most important sets that we at least need to get to is to try to at least get to a common set of what we're talking about when we're talking about both NFTs and we're talking about token gated commerce, just so that we can all have the same conversation, and the merchants and the people who are actually interacting with buyers or going out there and trying to do commercial activity, leveraging some of these assets, to be able to do it in an understanding of exactly what is the risk, what is the framework under which they're operating. Because I think that still isn't clear, and that's, I think, is part of the issue that's happening.
Yeah, I think that was exactly the question I just wanted to ask, because I think NFTs are very much debated right now, at least at EU level, in a financial services context, right? And when you look at a lot of the applications, especially as this panel is also, trying to touch upon the tokenized economy, where basically a lot of services, assets will be tokenized. Loads of them will not be financial instruments or financial in nature, right? I mean, you gave already, both of you, examples of things that are probably not being relevant to any bank or anything, but more for consumers in the e-commerce side. But I think there's a nuance to all of that. So the question is, how do we basically change the conversation or make it more focused? Because obviously when you're sitting in DG FISMA, you're dealing with the financial aspects of it, right? And then you define it, and then you come up with a definition, and that might touch upon things that are not financial instruments, right? And that's exactly the issue I think we're currently seeing, that the definition is true for sorts, for example, that are digitized or tokenized, but they're not supposed to be there. So how do we solve the problem of dragging things that are not meant to be regulated, or maybe they're intended to regulate? That's maybe something that you have to maybe clarify a bit also to understand for the audience, like, is this meant to be in there or is it not? And is it collateral damage? Should we have clear definitions? Do we have to involve different actors? Or how we can solve this from an institutional or regulatory perspective?
Well, of course, this question suggests that MiCA is a product regulation, and it tries to regulate a product, an NFT or a crypto asset. But that's actually not the case. MiCA regulates an activity, the activity of issuance. It doesn't regulate what the product has to look like, what it can do. You just have to disclose what it is, but it doesn't say its features. Okay, there's an exception if it's a stable coin, an asset reference token. There is more product regulation. It needs to have a reserve and so on. But that's only for those that claim to be stable and so on. And then it regulates the activity of certain services towards these crypto assets. Wallet services, so safekeeping services, brokerage services, trading venue and exchange services, advisory services, which are services which are typically of a financial nature, financial services nature. So if take these gaming tokens or these baseball cards or football cards or whatever, well, if they are issued as truly unique, currently they may not be covered by MiCA at all, but they would in any case fall under the de minimis threshold, because if you issue low amounts, you're not covered. If you if you don't have many buyers, and if you have a unique token, there can only be one buyer of it. The rules wouldn't have applied in any case. But of course, if you issue these level 43 swords, I don't know how many of these swords are there. Like, is there just one?
There can only be one.
There can only be one. So it's truly unique. Okay, fine, and that's fine. But sometimes you see these games and you have bragging rights and you can have the red cape, but actually there are thousands of these red capes, or 5,000 or 10,000 or 50,000, doesn't really matter. And one red cape is the same as another red cape. And so we see that some of these assets, because they are assets, they have value, at least in the eye of the beholder. People, you say it may be €0.50, maybe less, but it has value and it is traded on venues for that value, and the price goes up and down. And even if they are only worth €0.50, that is not a criterion to define something as being an asset. most of the crypto assets which are regulated have a value which is below €0.5. They're worth fractions of cents, and still they are assets. So it's the activity that is regulated by MiCA. It's the safekeeping and custody activity, the wallet activity, the trading venue activity, the advisory activity, the portfolio management activity. Now, whether or not there is portfolio management in NFTs depends on how big your collection or how big your portfolio of NFTs is, and whether or not you manage that yourself or you let someone else manage that, or someone wants to offer these services. And we sort of said, look, it would be good that these people would respect some basic rules, that they actually demonstrate that they're capable of providing the service, that they have liability for their service. And it would also be good that they could benefit from a single passport. So if they do enter the EU market, they have to comply with the rules of one member state, and then can provide their activity throughout the EU. If you take them outside MiCA, then they're really at the mercy of national legislation and however member states want to regard this activity. So it's always, MiCA is not only about putting obligations on people or trying to restrict activity. I take the view that MiCA is much more enabling than it is restrictive. We really wanted to empower this industry, and I have not come across any argument that MiCA limits, or a demonstration that MiCA limits innovation. It does limit alchemy. So people who create all kinds of things like, algorithmic stable coins, these things don't exist. You're either algorithmic or you're stable, but you can't be both at the same time. And so that we exclude, because we don't want to support or enable alchemy, or financial alchemy. But for the rest, people can do whatever they like. It's not that MiCA says you can't do this, you can't do that. They just say, if you do this, make sure you're qualified to do it. And if you're selling something as a crypto asset, explain who you are, explain what it is, and don't promise people that if they buy this asset, be it an NFT or a general crypto asset, that this Lamborghini they're aspiring to have is only a matter of time, that if they invest into this crypto asset, they're going to get a Lamborghini, and you can't do that. But for the rest, people can do whatever they like.
I think part of the concern, if I may, is that, yes, I agree. Services are really the focus, but because the space is so distributed, where you have so many multiple actors that are touching the same asset, unlike traditional technology companies, where typically a lot of the technology stack were very siloed, where one company had control over one set of data and another company had a set of control over another set of data, that it was very easy for us to define who was responsible for what. When we're talking about the Web3 space, and really what's happening in the NFT space, is that these underlying assets and technologies have a distributed use and distributed service. Those that actually interact with it are not single actor players, but they are creating these wallets, as an example. So if a merchant wants to distribute an NFT that is the definition of a receipt, like receipting as an NFT, it's a real possibility. It is happening. We are having a lot of merchants that are testing this out. Then the creation of that wallet for that end buyer, consumer, and then requiring, because potentially that same wallet could be used in other activities and services, then requiring that particular merchant to go through a full KYC AML process for somebody to create a wallet in order just to receive the receipt, creates an environment where people are unclear of, hey, I'm creating this asset stack that could be used for other things. I'm not doing it, but am I still required to follow this regulation that I don't know how to apply. And so we've been navigating this by actually having the conversation with the merchant, trying to understand exactly what they're doing, how they're doing it, and what the bounds of what their responsibilities might be. But unfortunately, it's still unclear from our merchants' perspective when they look at some of these regulations to truly appreciate, well, what is the end level of the risk that they are exposed to, given that the assets and the underlying services and technology they're creating could be used for other things beyond what they're trying to offer.
Do you want to come back to that?
Yeah, I mean, just one comment also on what you said, Peter. I mean, it's not 100% correct that it's only activity based. So your financial market regulation, for example, is always activity in relation to financial instruments, and MiCA is activity related to MiCA to crypto assets. So it's about the term crypto assets. So if you look at the activity of making custody of an asset. Of course, in the financial market, it's regulated, but there's a reason why it's regulated, and it's necessary. If I make custody for a piece of art, not digital, just a physical Mona Lisa, it's not regulated today. Your business model, you could do the same thing without blockchain. Just as a kind of old-fashioned register, maybe, and then it's not regulated. But as soon as you choose blockchain, then it's regulated. So you are risk to be regulated. And this is the kind of this blurry thing that happens now, that we talk about. Services that are in the financial market, there are good reasons to regulate them. We have good reasons to regulate stock exchanges. We have good reasons to regulate banks and so on. But those activities that from the financial markets are necessary to be regulated, that are but also made for other assets in the real economy, this transfer is not logic to me in all consequences. And we have to discuss about the consequences, what happened if tokenization leads to a punishment by having higher efforts for administrative costs and so.
Right. I mean,
Thank you.
There you go. Very nice. The gentleman from Binance yesterday said it very, very well, which is NFT is effectively digital ownership. It's the ownership of an asset, which is on a distributed ledger technology. And then that may link, in the case of most NFTs, to an IPFS system, which is where the asset actually exists. I feel that regulation makes sense as long as the regulation is good. And I think that the technology is still in such an early stage of its infancy that we don't necessarily know what additional use cases are going to emerge. And ideally, that regulation, whatever it looks like, provides appropriate consumer protections, because that's necessary to protect all of us from bad actors, but also does allow some of the points I mentioned earlier around innovation and investment. So I think it's a bit of a balancing act, and I do think that it's important to think about the infancy of the industry today.
But if I may, if that's true, if an NFT is just digital ownership, then what's the difference between an NFT and a share? Because a share is just ownership. If you have a share, you have an ownership part of a company. So it's the same thing. So I think it's not that easy to just say it's digital ownership. The question is whether it is an asset, it has value. But to your point, indeed, financial regulation, I'm not saying that MiCA is financial regulation. MiCA is about crypto assets. Whether these crypto assets have a financial purpose or not is not really that relevant. There was an awful lot of discussion about that in council, about the payment purpose or the investment purpose, but the commission didn't really say that. Was that the purpose, what people use these things for, doesn't really matter, and these things change over time. Just like with Bitcoin, it was developed, or it was intended to be a payment instrument. It's used for all kinds of things, but rarely, if ever, for payments. So the purpose doesn't really matter. The question is it an asset? And then it's not a financial instrument, because if it were a financial instrument, it would be covered by MiFID. So it's an asset, and we're going to have rules on it. But I grant you, there are certain assets, the trading of which is not regulated by financial-like regulation. For example, commodities. Spot markets in commodities are not subject to financial regulation. So they're not subject to the rules governing trading venues for bonds and shares and what have you. But markets for commodity derivatives are financial. So there's always a boundary, and sometimes there's historical reasons as to why one is covered and the other is not. And these historical reasons sometimes are rational and sometimes are not, or they sometimes make sense, sometimes they do not make sense, because the spot markets influence the derivatives markets, and the derivatives markets influence the spot markets. And so the question is, and that's interesting, is that crypto markets, we actually regulated the spot market for cryptos, just like the spot market for financial instruments is regulated. But if a crypto asset is a commodity, or an NFT were a commodity, then you say, well, why would you regulate the spot market for a commodity? But of course, if it were a commodity, commodities typically are very fungible. So then you end up with the fact is that they're all the same. And so 1 barrel of oil is the same as another barrel of oil, or 1 kilo of aluminum is the same as another kilo of aluminum. So then they're therefore are fungible. So you end up in this circular reasoning. And so when regulators act and when legislators act, at a certain moment they draw what can be seen as arbitrary lines in the sand. And the only way to avoid that is having regulators not acting at all. And maybe that is then the only alternative. So the question is, now we have MiCA with all its positive effects and possibly also some of its negative effects. And the alternative is not having a MiCA. But I take the view that if you wouldn't have MiCA, there would be more negative consequences than having MiCA.
No, this
If I may, I think there's another set of conversation that we do need to have around how are consumers perceiving NFTs? What is their understanding of what it is? Because oftentimes when our merchants sell an NFT or interact with an NFT, what happens sometimes is often the buyers look at it as no different than buying a T-shirt or buying a watch. To them, it's no different than a physical asset that they're purchasing. And let's be perfectly clear: some watches do go up in value. They are traded off platform with each other, and there's values that are being assigned by individuals. But just because it happens to be digital, it doesn't mean that we have access to things that are beyond what exists in these other asset classes. And I think that's a distinction, in that from a merchant and buyer perspective, they're looking at these assets as being the same thing as the physical assets that they have in their home. Somebody did mention artwork. I mean, it's art has a very specific reasoning and very specific way of assessing its value. But when it comes to things that are in your household, such as the set of clothing that you own or the furniture that you own, it's a very different visceral ownership mentality that these buyers have. And I think it's important for us to understand and to make sure that what a merchant has to meet is no different than what may happen in the analogy that happens in the non-digital world. And I think that's where there's a bit of a disconnect that's happening.
If I may, I've got a question on this, because of course these people see it as it may be the same as their T-shirt or their watch, but the T-shirt, if you want to transfer that to someone else, you have to put it in the mail and send it. Now someone else has a T-shirt. But this NFT, this proof that you bought this T-shirt, and that may give you access to other benefits from that shop, is transferable. So The question is, what we're more interested is that what happens if the customers start transacting these proofs that they've bought at a certain shop. I think that my daughter is into Louis Vuitton handbags. So I said, like, if you want to have access to certain Louis Vuitton products, I understand, you have to have bought other Louis Vuitton products. Otherwise, you don't get access to it. But so if you turn that into an NFT, you can actually transfer your line in the queue, if you wish, that gives you access to that product to someone else. So it becomes something of value. That doesn't mean that if my daughter, if she had a good line, a good NFT, which gives her a good spot in the line, were to sell that spot in the line, that she's actually selling the handbag which she already has. No, she's just selling the spot in the line for the next purchase. Whether you should subject that, whether you should treat that as an asset that has a financial value and that is subject to wallet services or brokerage services or exchange services, that depends a bit on the marketplace. But if there are people who are providing these services, and look, I'm going to offer a marketplace for Louis Vuitton buying rights or your line in your place in the queue rights. What's the difference between that and some other crypto assets?
So I agree with you on that, but I think what's interesting here is that the marketplaces where those secondary activities happen is very distinct than the set of NFT that, say, Louis Vuitton will be giving away. And I think that is the distinction that we're trying to get to, because Louis Vuitton may be giving these out. I mean, it's other merchants are doing this. It's definitely a use case that is happening right now in the wild. But when the issuer of these initial assets, when they actually issue these NFTs, their intent isn't so much to create a value, but the fact that the underlying technology allows for somebody else to create a marketplace, a secondary marketplace where your daughter could go and list her access in line NFT, like that marketplace, of course, if it needs to be regulated because there's a lot of financial transaction happening, that may happen. But does those same regulation apply to Louis Vuitton, who never really intended for this to happen, right? It's just the underlying technology is being used in a different purpose than the original intent. I think part of the issue is because a lot of people are looking at regulations and there's no clear boundaries around what is the obligation of the individuals that are issuing these assets, because all these obligations seem to stem up to the initial creation or the initial offer of some of these NFTs rather than, crypto assets, rather than the subsequent uses. And it's trying to not distinguish between the service that are actually being provided, because in this situation, Louis Vuitton isn't offering a marketplace, right? They may if they choose to, but they're not. And it really is whoever is offering that marketplace should fall under those regulations, should meet and should strive to do those efforts. But right now, in a lot of the reading, in a lot of the discussion, because Louis Vuitton has to create that particular initial wallet address, then they have to go through that asset creation and that wallet management creation. And all of those regulations kind of roll up to the initial creators. And so there's a lot of confusion from what is their obligation. And I think that is a really important distinction around exactly who is responsible for which aspect of meeting some of the obligations.
Yeah, I agree. And we run a secondary market. I mean, 98% of our revenues today are from secondary market transactions as opposed to primary market transactions. And if your daughter wanted to sell her right in line, which is more of an ephemeral right than a tangential asset, then she could come to our marketplace and hopefully find some buyers for it.
Yeah. So, but then the question is, are you running a trading venue? Because that's basically what a secondary market is, a trading venue. And then the question is that a trading venue that should be regulated or not? The Commission's proposal was yes, because NFTs are crypto assets. Council and the Parliament says, well, NFTs are not covered, but certain things that name themselves NFTs aren't NFTs. So then the question is, well, when is an NFT an NFT, and when is it not an NFT? And there Mika says, well, if it's part of a large series or a collection, so there's still a debate as to whether large applies to both the series and to the collection, or is large series and small collections, or large series and large collections. Okay, that's for the linguists to figure out what that means. But if it is part of a series or a collection, it's collectible, then the legislator said that will be considered to be fungible. And if it's fungible, that would then suggest that the legislator had the intent that MiCA applies to it. I didn't draft this, so the commission didn't draft this. So if people say, well, what does it mean? You shouldn't really ask the commission. You should ask council and parliament.
Very well. And I'm certainly not sitting here today saying we don't want to be regulated. We think regulation is a good idea. And atomichub.io, which is our secondary marketplace, welcomes good regulation that allows us to continue to innovate and invest. But we don't know what the future looks like. Today our primary use case is around gaming, and then we have collectibles and we have artworks. We don't have Bored Ape Yacht Club, Mutant Ape Yacht Club, or CryptoPunks being traded for hundreds of thousands of dollars. We have a very high volume of microtransactions coming through our platform, but that doesn't mean that's what it's going to look like tomorrow or next year. So whatever that regulation should be, should allow us to grow in a way that makes sense.
I agree that we need more education, right? I mean, that's why we're doing this summit here. That's why Blockchain for Europe exists and our partners exist. And I think we're trying to have this dialogue. And it's important, I think, also to have this on a broader level, probably than just the EU, because this is true everywhere, right? So it's not like that it's a very unique, specific EU problem. Crypto assets, NFTs, DeFi, all of it is global by nature, right? So the question is, what would be the best approach to make this work? I mean, we just discussed now for nearly an hour about like what we need, what it is not. So the question now, and again, as you mentioned at the beginning, you're the guys that come up with regulation, not necessarily FISMA always on everything, right? But like, what would be something that, based on what you heard today, is something that could be done, how we can help with? What would be a feasible next step? Or do you think we should just let it play out? I mean, there's a balance, right? I mean, there's a wish of having clear rules, but these rules should be, let's call them open-minded and innovation-friendly. Is there something from a commission perspective where you say, like, look, guys, stay calm. You better not call for something that goes out of hand? Or is there a way where we can work together on this to make this work?
Well, the two things going to happen. One is, apart from the prose, and it's prose, it's not poetry, the prose that's in MiCA about how it does or doesn't cover NFTs, there's also a request on the Commission to come forward with a report within 18 months, I think it's 18 months, also on the issue of NFTs and what should be done. And which is, you see often in regulation, if the legislator isn't quite sure what to do, they'll sort of write something in the text, which may or may not mean something, and then they'll say, the Commission will figure something out. But this is, as I said in the beginning, this is not a promise that the Commission will propose regulation. It's a request on the Commission to do a report. And we always respond to requests, so we will do a report. What we'll write in the report, I have no idea, because it's not yet 18 months after adoption. So, and 18 months is a long time, and in which we can learn a lot about how this ecosystem of NFTs is developing. But what also will happen is the Parliament will shed its light on the issue in its resolution. And the Parliament may conclude, I have no idea, they may conclude that say, well, all of this NFT space is very interesting and is best left alone. If that's what the Parliament advises, then the resolution says, Commission, we advise you to do nothing possible. Or the Parliament takes the view that, well, there's all kinds of things that need legal clarity, or that need regulation, or that need consumer protection, whatever, market integrity. And the Parliament says, oh, well, we think there's a problem here and a problem there. Please, Commission, come forward with a proposal to address this. So these are the two things that are going to happen. Well, there are actually three things. People are going to sort of decide for themselves whether or not they fall under MiCA. We're going to do this report. in 18 months, and the Parliament will do its resolution. And hopefully these things kind of inform each other.
Thanks, Peter. Maybe, Thomas, from your perspective, what would you recommend to the industry to do and how to act upon? And then maybe as a concluding words, I would like to ask Jeffrey and John to maybe give like a wish list or a hopeful wish on what you think should be done, and then we will conclude.
Okay, first of all, I want to state that, I mean, we are just discussing about certain aspects of MiCA, and it sounds like you're not satisfied with that. So business needs legal clarity, and with MiCA, we have made a huge step to create legal clarity for many use cases that have been uncertain up to now. So to have MiCA is really a huge benefit. But the borders of MiCA, we will see what happens in the future. So I invite everybody to discuss the concrete applications of NFT and these open questions, if it is part of MiCA or not part of MiCA, also on a European level to create kind of a discussion around, so that we create a European-wide clarity which kind of business model are subject to MiCA and not. And then we create this vision that we wanted, this European-wide token economy can happen.
I love that we're having this discussion, that we're speaking about the merit of good regulation around this emerging industry. I would encourage people to engage with us, because we're very happy to sit down and walk them through our products. If somebody's looking to understand more about what's happening with NFTs in gaming, please visit nftinsider.io, which is a media site that we run, and visit atomichub.io, create an account, go through the process of buying an NFT, using it in a game, and any questions, please reach out. We're very happy to sit down with people.
John?
Yeah, no, I'm so glad that we're actually having this conversation in a forum. And from Shopify's perspective, I think there's a very real appetite for us to understand and appreciate and work with others to try to create a clear understanding of exactly what everybody's obligations are and how to actually move forward in this space to allow for natural communities to be able to be rebuilt, leveraging some of this really interesting technology that's been created. So we look forward to actually interacting with a lot of you and having these conversations moving forward.
Thank you. I think what we've seen today is basically that we have MiCA as a starting point to have this discussion, and that it's not the end, but rather the beginning. And I invite everybody to join, ask our panelists, ask online. We also, as a secretariat, are always happy, to discuss these things. So thank you to my panel. Thank you, John, for dialing in. And I hope you enjoyed this conversation. And please reach out to them. They're pretty surely happy to answer any questions about NFTs afterwards. So thank you. And please applaud our panel today. Thank you.
Thank you.